Hey, what's going on, guys? Hope you're all doing really well. So, I'm going to go through this case study trade on AU, which was, I believe it was around 2 weeks ago. Um, and I want to go through it because there's a lesson to be learned, and it's a very clean sort of entry. And it's, as you know, it's my go to sort of setup and continuation trade. Okay, so we're on the hourly time frame, and the first thing to point out would be we had a clear impulsive move up. That's broken structure above this high. So prior to this, we had a push down and we had this up close candle. Price impulsed through that and wicked above it. So we wicked that high. We then pulled back and we broke structure and we put in a new higher high and we have a new higher low, which is here. Okay, so if I just hide this, I just hide that. What we could see is, we have a clear candle that's broken structure with momentum. So the candle we would be looking at as the order block would be this one here. But what we can do is refine on lower time frames if needed. And we always know that when we have a wick like this, that there's always something within that. And it happens to be that on the 15-minute time frame there was a bit of liquidity just below these lows here, and price swept that liquidity and we came in, you can see, quite aggressively. So that's also why I wasn't looking at this area here, and more so looking at this wick here, and then looking to get long from this area. And as this is a continuation trade, the very first target that we're looking at is always going to be that the highest point, so the high, and you can see price met that high, and then what we're expecting is manipulation, so for price to reverse, which done so in the form of tapping into this candle here. So we have a sort of a sub break of structure from this high. We hit that high there, we wick above it, tap back, and then we actually went higher. Okay, and the reason why we see this large candle, which was news, but the reason is basically to liquidate all of these moves here. So these higher lows, and essentially this move that caused the overall break of structure to the new higher high. So yeah, it's the news just helps to move price, take liquidity from anyone with stop losses at these lows, and from where this move actually started that caused the break of structure. Okay, so let me just take it back to there. And what I'm also looking for is, once demand forms, has it tapped into supply, or has it mitigated or failed supply? So what we can see from this here, we have the last up close candle, because price pushed down, we put in a new lower low, so we've broken structure, and we've done so leaving imbalance, and we broke with momentum. Okay, so what we can see is once price broke structure to the upside, we actually come in to mitigate this supply zone, and we actually broke above it. So you could say supply failed, that created demand. Okay, so it gives this demand zone a lot more, or a higher probability of playing out. So yeah, let me get into the 15. We can delete that off now. 15-minute time frame, we can see that break of structure that I had zoned out. And you can also see we have this down close candle here, but we have the wick, as I mentioned. So these lows here, we have liquidity, and you can see price came in quite momentously into that wick, took liquidity from them lows. And if we get into the 1 minute, I did sell, as I'm always saying, I'm not looking to buy until price shows me it wants to go up. Just because it comes into the area, it doesn't need to go, okay? So if we just go left here, we can see, oh, that looks messy, hold on. So we can see, zooming right in, all of these lows, we have liquidity, we can delete that off. And, you know, there would be a lot of people looking to get long from this area here. But then price, you know, we left some imbalance on the 1 minute. So we broke structure here and price didn't come back into these levels. And even down here, we have this, you know, visible candle, which is important. But what I'm looking at more so is these lows here for price to come down to seek liquidity. Okay. So if we go into the first entry, and I get into some more entries that could have been taken. So once price pushed down, we broke structure here, pulled back, lower low. So we have an area here, which would be, you know, the first entry, which didn't actually get tagged in. And then, you know, we pulled back, we put in a lower low. And as I'm always saying, you know, I like to see a clean break, and you can see we've broken that low, you know, very, very, very aggressively. And we have this little range, you know, 1, 2, 3 candles, and either candle or, you know, taking a whole range is, you know, there's no right or wrong. But I just took this last up close candle and set my entry, you know, at the bottom of that order block. Stop loss, I did go a little bit wider just because I was looking at this area thinking price may just take this high, come into that area and then go. So I went with 3 pips rather than, you know, 2 pips, but 2 pips would have been fine either way. And then, yeah, tapped in, and so this is the lower low, that's the lower high. And what I'm looking at next is marking this low on, and you can see the move that actually broke that low was these 2 candles here. So we can mark that on. So the valid order block would be this last up close candle, and that's gone a different color. But yeah, the order block is this last up close candle, and the reason is because this move here is what caused the break of structure from the most recent lower low. We tap in, and I did not take these trades. No real reason why, but I just didn't take these trades. I took this one here, but I'm just showing you, you know, the potential that we have if you're looking to be really aggressive with these entries. Okay, so if we move on, what we can see next is we would have got tapped in there and we broke structure again. So I'm sure you can see it, but we actually put in a new lower low, and we have the last up close candle, which would be here. And maybe you didn't get tagged into this one. Yeah, you wouldn't have, but, you know, we push back to rebalance that sort of inefficiency, and I'm just going to delete that off because I don't want to get it too messy. But yeah, so you've got 1 entry, 2, 3, a good 4 entries, and 2 of them probably not tagging you in. But, you know, what we're seeing is clear bearish order flow coming into the higher time frames. And once we start coming into these levels here, we are looking long, but we don't necessarily need to be switching bias until price shows us that it wants to go long. So the thought process coming in, so once we first tap into the higher time frame area, what I've got marked on is the most recent supply zone. Okay, so I'm looking at this as a new lower low, and we have the last up close candle here. And although price didn't really fail supply, we did mitigate. So firstly, what I'm going to go through quickly is this aggressive entry down here. Okay, so I didn't take this entry down here, but the reason why this is classed aggressive, in my opinion, is because we have a lower low and we have a lower high. Price pulls back, comes down, but it doesn't really, it closes below, but it's not really a convincing swing point. And, you know, bearish order flow is still intact. We have this area up here. We do push up, and you could argue that's a break of structure there. It is a break of structure, but it's more of an aggressive one because we didn't really get a push down and a very convincing lower low. But, you know, we push up, break structure, we tap back into that last down close candle, mitigate, and then we continue. Okay, but I didn't take that trade, and I'll tell you the one I did take. So once we come in to mitigate, we also have intent for higher prices. So what I mean by that is prices failed to put in a new lower low, and instead we broke structure to the upside. Right, so that's showing me that sellers, you know, that they failed to bring price lower and actually put in a new lower low. And instead what's happened is we've actually pushed up, we've mitigated that supply zone, so price could definitely continue down, but we need to look at what's happening. So we have a move here, so we push up and we have a little range. So we have 1, 2, 3 candles, so a little pause in price, and then we actually break structure above this high here. So that's where the move started that caused the break of structure, not down here. Although you could wait for this, price doesn't need to come back down to here because the move that caused the break was, you know, this range. So a range, initiation out, mitigation, and then continuation. Okay, so I took the last down close candle, got tagged in there. Also, we've had a mitigation of the supply zone. So it's likely, you know, demand created, supply mitigated, and we can now expect continuation. Or, you know, anticipate. Never expect, we want to just react and, you know, anticipate. Okay, so if I carry on, I got tagged in, so I'm in this trade. And the next sort of entry that you could be looking at, which could be, you know, it could be a higher probability because we actually, this move here is the move that actually failed supply and it created demand. Okay, so we pull back, we break structure, we break supply, and we had the last down close candle, we tap back into it, and you would have been tagged in here, and, you know, 2 pip stop loss, whatever you use would have been fine. And yeah, you would have got tagged into the trade, but I didn't take this trade. But looking at it now, I did ASR this, and, you know, this definitely is a trade that I should have been taking along with this one here. Okay, and then we come back, and I don't believe you would have got taken out. No. Okay, so price doesn't go below this low here, and we continue up. Okay, but I didn't take that trade. But if we look to see how I managed this trade, so once I got tagged in, I'm really looking to take my risk off the table once we break above this most recent high. Okay, so that was here. I moved to break even, and then I see this form, we broke structure again, and I actually managed just below the low, giving it a pip or so of, you know, breathing room just in case price comes down to wick. And then you can see I didn't get tagged out, and then we continue, and the next point would be this higher high, and we break it with this bit of price here. So I moved to, I believe it was just below this low here, and really now I'm looking for, you know, a clear pullback, as you can see we have here, and then a new higher high, which is exactly what we had right here. So we pull back and we put in a new higher high. So I've now moved my stop loss just below this low here, and the next point, I was more aggressive because it was 5 p.m. So I've now seen this pullback here. We've broken structure again, and I believe I did manage directly at that low for 6.4%, and then I do get tagged out here for 6.4%, which looking back was definitely aggressive, because usually what I'm doing is managing on a time frame up or even the 15 if it's a continuation trade. But given the time of the trade, it being, so here is nearly 6 p.m. and I was off to the gym. I go gym at 6:30, so I don't really want to be staying in that trade. I'd rather manage aggressively and get out for 6.4%, which is still great. So yeah, that's what I've done. So if we just carry on, you can see price does barely break that low, and then takes me out, and we do continue. And yeah, so we're just ranging now. We do pull back a little bit. We have this area here which I was price could have come back into and continue. But if we just carry on, you can see we do put in a new high, 15-minute time frame. We can just carry on, see what price does. Okay, so what we're having now is sort of a break of structure, a mitigation of that last down close candle, break of structure again. So let's see what happens. Yeah, we put in a new high, and yeah, the hourly time frame, you can see that high, and I did manage aggressively, and we did have 13% to that high. But 6.4%, if you take a few of them, or 5%, it's going to add up at the end of the week and the month. So yeah, that's the trade. And just come out bar replay tool, we can see that was a good few weeks ago. Price did push up, and as I mentioned, we then saw large momentum down, which is, as I said, is liquidating all of these lows here and this candle. But if we just go through price quickly, because it's so clean when you understand what price is doing. So we push down, which is news inflicted, but we do break structure, and we was looking at this area here. So what we have is the last up close candle. Price comes back in to that candle, and we mitigate, and then we continue. We also have the same thing here, where we've broken structure with this move here. Break of structure. And where's the move that's caused the break? It's that candle, but we can refine it to that candle. This is what I was looking at, and looking back now, we do have a range. We have a clear range, which price came in to mitigate, and that's why we then see the massive sell-off. Broke structure, so we can mark that on again. We broke structure there, and what does that give? Well, we have a wick. Okay, so we have a wick left, and as we know, that would be an order block on a lower time frame. But you can be looking to take the actual up close candle, because that's essentially what price came back into. And one thing to look at quickly is, we have a wick, a slight pullback, and then we actually break again. So we could be looking at this area here. Okay, that's what price came in to mitigate, and price is now respecting that area, and we're having sort of substructure breaks within here. This was also news, once again, just like here, where news, they just use it as sort of a cover so they can mitigate orders, mitigate this area here, and that's why we're now seeing price come down.